Let's have a look at the 7th adjustment for V Leahy for the 2023 higher level sole trader account. So it says the company revalued the land and buildings at 950 at the start of the year. So remember, anytime we revalue something, there's 3 accounts we need. So we need to find the revalue figure or the increase in the value of the asset. We need to find the depreciation or the cumulative depreciation of the asset up until that year. And then depending on when it was revalued, if it was revalued at the end of the year, we need to have the depreciation for this year. And if it's revalued at the start of the year, we don't need that depreciation figure. So because the buildings were revalued at the start of the year, we're only going to be looking for 2 figures. The land element of the new build is 200,000. So land doesn't depreciate, so we need to take the depreciation away from the land and buildings figure. The revaluation has yet to be reflected in the accounts, and buildings are to be depreciated at a rate of 2% of cost per annum. So because we revalued these at the start of the year, first thing we need to do is we need to find out what is the depreciation on our new assets, on our new buildings. So the buildings is 950,000. We know that the land is 200,000. So the figure for our land, our figure for our buildings is the difference between the two. So 750,000 is the figure for our buildings. So that 750,000 is the figure that we use to multiply by the rate of depreciation to get the depreciation for this year. And the depreciation in question is 2%. So 750,000, multiply that by 2%. So the depreciation for this year is 15,000, and that 15,000 goes in your profit and loss. As part of your administration. I'm going to look to see, do we have any accumulated depreciation for our buildings? No, that figure then, because it's our new buildings, that's going to be the figure that goes into your balance sheet then as well for your cumulative depreciation. The next one then is to find the revaluation figure. So the revaluation figure is the difference between the old value, which is 850,000 in the question. The new figure for our land and buildings is 950. So that's going to be a profit of 100,000. So the revalue figure is 100,000. The accumulated depreciation that we have so far is 105,000. Because we revalued at the start of the year, we're not going to have any depreciation this year for the old buildings of 850,000. So the revaluation reserve that goes into your finance by is 205,000. So that goes into your balance sheet in your finance by section. So with this working, so remember, sometimes you can be asked, or sometimes there might be adjustments done previously, so it could be a warehouse that was damaged or an extension that was built onto it. So just make sure that it's the correct figure that you're using to calculate this. So we know from this question that it's telling us we revalued our land and buildings to 950,000. So we need to take away our land to find out what's the value of a building. So 750 is the value of the buildings. If buildings was adjusted, you'd be using that figure from our previous working. So multiply that by 2% gives you 15,000. That 15,000 goes in 2 places. It goes in your profit and loss in administration, and it also goes in your balance sheet as a tangible asset. And then we have to calculate the revaluation reserve. So the revaluation reserve is the increase in the value, which is 100,000. The depreciation, the cumulative depreciation on our buildings that we have up until the start of this year, which is 105,000. And because we revalued the buildings at the start of this year, we're not going to have any depreciation on the old value. And that's your working 7 for V Leahy 2023 higher level sole trader question.